Good morning, everybody. Happy Tuesday. We're about to get started here in a couple of minutes. All right. Let's see here. All right, let's get started here. Want to make sure we are on time for everything. Okay. All right. Again, good morning, everybody. Happy Tuesday. Welcome to October. It's October the 1st, 2024. And, I think from a market's perspective here, we're at a pretty good point in terms of the demand that we're seeing in the markets, or the supply actually, from a liquidity perspective. And so the best way to start off with that is again something that I've been mentioning for a few days now, where I went through a lot of our clients one by one, certainly on Blue Marlin Advisors, tried to get people to understand this, but global money supply is back on the rise, and it's been back on the rise now for like a year. It's just now accelerating, with the Fed, of course, cutting rates, with the ECB cutting rates, with the Swiss National Bank cutting rates twice, and of course China last week. And so it's very difficult to not be bullish when that happens, bullish risk assets. But we also have to understand what the implications are from that, and it's essentially it's inflationary. If you're an Inner Circle member, we're going to continue talking about this in about 20 minutes when our Inner Circle weekly member session starts. But I did want to touch on it a little bit before I show you one idea here today that I think is funny enough, actually not really logically correlated, but it is correlated as a sign of times, which I will show you here in just a minute. So from my perspective, it's very difficult here to not be bullish. Again, it's a time frame question, and I believe I mentioned this here yesterday. We do now, having entered in October, expect U.S. equities to take a bit of a pause, a bit of a breather ahead of the election. That, again, makes a lot of sense because institutional investors are not really keen on adding a lot of money ahead of the election. Why has September been a strong month for equities? You're looking at it, right? That's the reason. So, but I think a good amount of that for the near term has been baked in, and so we would expect some pause before we then see another rally. And again, I want to be very clear, I'm bullish here, but I'm not necessarily bullish for the next few weeks, I think, if that makes sense, right? And when I say bullish, we're talking about equities. I'm actually much more bullish global equities than U.S. equities, because U.S. equities have outperformed for so long, so massively, and there's actually more stimulus around the world to come. So anyway, that's where we are here. Now, today, and this is not really the point of this show, is to talk about today, but it is important to be aware of the calendar. We today, October 1st, are going to kick off with ISM numbers at 10 o'clock Eastern, so that's in 1 hour, or a little bit less than an hour. That'll be important to watch ISM manufacturing data. These are important numbers, right? So we'll see where that goes. And again, we do expect a bit of a pause here in equities for the next couple of months. This is specifically for U.S. equities. Now, where are we in terms of a specific idea? And that's, remember, this morning thing we're doing here is supposed to be, sort of 10, 15 minutes. And I want to give you one idea that actually this morning that JB, John Burnell, brought to my attention in our morning call. It's something that we've been talking about now for probably 3 years, this idea of being bullish thematically, basically cybersecurity. And so before we do anything, let's look at the chart, because I know people like charts. I do too, right? So here's the chart, and to no great surprise in many ways, this looks like lots of other things look out there. It looks like Home Depot, which has nothing to do with this, right? I mean, between Home Depot and Hack, cybersecurity stocks, I'm not sure what the correlation really is outside of the fact that market liquidity is coming back in, right? Which is just a general demand for risk assets. But there's actually a story here behind cybersecurity that I think a lot of people can get their head around. If you look at the globe, you can see we've got global tensions, unfortunately, and more stuff is so this is going very basic, right? But if I'm looking at my portfolio and I'm noticing in my portfolio, hypothetically, that I didn't have a decent amount of exposure to cybersecurity as a theme, I would want to get some exposure. Obviously, this is not advice, it's simply just educational, but I would take a long and hard look at my portfolio right now and see do I have exposure to something like this HACK ETF. This is cybersecurity. Again, let's look at the largest holdings of this. And this is kind of interesting because I didn't actually fully understand why this is such a big holding. And let me quickly make this a bit smaller so I don't have too much of a problem with this. But the biggest holding in Hack, which is a little bit concerning to me, is actually Broadcom. And that's because Broadcom, aside from being a semiconductor company, also makes a lot of software that basically protects that stuff, all that network equipment stuff. And you can tell I'm obviously not, a techie guy to be able to understand all that in its nitty gritty, but I can understand why this stock is a 10% holding. Makes me a little bit nervous. I think Broadcom being so exposed to semiconductors is not an ideal way to be playing this space, but that's where this ETF is structured. Luckily, it's got everything else in there. It's got the actual defense companies like Northrop Grumman. It's got Cloudflare. It's got Palo Alto Networks and Cisco Systems, which is all stuff that is in that arena. So let's look at a couple of charts. And again, this is the one thing that's a bit concerning to me. If I look at this ETF Hack, so again, this is not necessarily a trade as it is an asset allocation. If you look at the long-term chart of Hack, let me just make this very clear in case anyone doesn't see this right away. I'm happy to obviously here to help you out with this visibly. Again, this is a longer-term view. This is not for the next 2 days. This is really more multi-quarter view. Cup and handle, right? I think everyone knows this stuff. We talked about it yesterday in Home Depot. It's the same exact thing here. What does Home Depot have to do with this ETF? Zero, right? Except for the fact that global liquidity is coming back into the market. However, this here has a sustainable tailwind story because, again, more and more companies are going to need cybersecurity protection. We all do. Like I said before, everything is more and more online. There's nothing new. Obviously, this has been like this for 30 years, or 20 years at least. No, 30 years actually. So nothing new there. But I think these companies could benefit. So if I'm looking to diversify my portfolio a bit, and I would seriously look at this. This also, and this is where this comes full circle, also has a bit of an inflationary protection story behind it, right? So one of the themes that we've been really trying to start, and we're just starting on this to explain to people, is protect our portfolios from inflation, meaning benefit from inflation. And again, if you're an Inner Circle member, we're going to talk about this a lot more in about 10 minutes from now. But inflation, and I just had a conversation yesterday with Nancy Davis. She's the manager of the iVol ETF. We talked about this for like half an hour, and we're going to have a great interview together. She's going to come on my podcast next week, I believe, and I will share here as well. But people don't own inflation. People are basically short inflation in many ways in their portfolios, which is going to cause a huge problem for most people's portfolios. So this, ironically, is it's not a perfect correlation, obviously, probably not even an 80% correlation, but there's an inflation protection here in something in a secular tailwind story like cybersecurity, right? This is the kind of thing that should more than keep up with inflation due to where the world is heading. Again, we're seeing a bit of deglobalization, right? And hopefully we can kind of come together as a globe a bit more at some point really soon. That would be nice. I don't know. I'm not here to make any prognosis on that. But even then, right, there's just because of the fact that we're more and more digital. Again, nothing new here, nothing groundbreaking, been going on for 30 years. These companies could probably accelerate their growth over time. So how high can this go? I know that's the easy question to ask. It's also not necessarily the smartest question to ask, but I'll try to address it. Very, very simple technical analysis. And again, this is not a trade for today, but this is more of an allocation for at least a few quarters, probably multiple years. I mean, very, very simple analysis here gets us to, let me share this with you. What you want to do, or what the way it kind of basically works, you take so this is a cup and handle. This is a coffee cup or a tea mug, whatever. There's the cup, there's the handle, and we're arguably going to break out here, right? So you could also draw it like this, and we can doodle with it and have some fun. But ultimately, what I want to do is I want to see how high could this go ultimately, right? So where do I, whenever and if it gets there, where would I want to consider taking some initial profits? Well, I can measure the depth of the handle and then add it on top of the top of the cup. And this all sounds like total, third grade kind of business, and it kind of is, but it is helpful. I mean, obviously charts are very, very helpful. So what I can do is I can measure that, and so that from this point on here, we're looking at probably 20%, roughly 20% upside towards $80 or so as sort of a next big upside target. Beyond that, you can go, well into the hundreds. But again, that's kind of more sort of a near-ish term sort of price target that we could look at. So that is the idea here for today. Let me see if there are any questions or comments. No, I think that's probably about good. Again, trying to keep it to our 10-15 minutes here this morning, not to bore people. If you're an Inner Circle member, we're going to talk a lot more about how this whole China trade is actually inflationary, where it is inflationary. We're going to look at and we're going to do hopefully a live gap trade this morning as well to start off the month of October. So if you're an Inner Circle member, we'll see you in about, 8 minutes or so over in the Inner Circle weekly members session. As always, hopefully this was helpful. Quick 10-15 minutes in the morning. We'll be back here tomorrow morning. Any questions, please let us know, and have a good start to your day.